Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today, we're looking at TMC.
If you find our talks useful, please consider subscribe, like, and comment underneath. We also have a link in the description for a 14-day trial to StockOracle, which is an affiliate link, so it helps support the deep dive. But remember, AI insights and value estimates may be wrong and should always be verified. We're here to talk long-term wealth building, not short-term trading.
Exactly. We are entirely focused on, whether a company can actually compound shareholder value over the long haul. And TMC is, well, it's a really fascinating test of that thesis.
It really is. I mean, to hook you right away, imagine you're in a submarine.
Right.
You are 3 miles underwater, just hovering above the abyssal plain. It's absolute crushing darkness.
Sounds pretty claustrophobic, honestly.
Oh, it gets worse. Your sonar is pinging, and it's illuminating this limitless field of what looks like cobblestones on the ocean floor. But they aren't cobblestones. They are a literal multi-trillion-dollar treasure trove of critical metals. Nickel, cobalt, copper, manganese.
Just sitting right there.
Just sitting there for the taking. But there's a massive problem. Your oxygen gauge is flashing red.
Right, because you have a finite amount of air left in those tanks. Just enough to slowly get back to the surface, assuming, absolutely nothing goes wrong on the ascent.
Exactly. It's a terrifyingly fragile situation. And to make it even more frustrating, you don't actually have the key to open the hatch and grab that treasure. The only entity that can give you permission is a sprawling government bureaucracy thousands of miles away.
Which is just the perfect analogy for TMC. It's the ultimate high-stakes, binary investment setup. You are completely at the mercy of the clock and the regulator.
So let's unpack this wealth-building thesis, because yesterday, August 21st, TMC's stock absolutely erupted.
Yeah, it surged 20.65% in a single trading session, closing at $4.79 a share.
And that massive jump had literally nothing to do with them pulling actual metal out of the water. It was triggered entirely by a highly anticipated piece of government paperwork.
Right, the NOAA catalyst.
Yeah. And as someone who focuses on protecting capital and valuation, I have to look at the business quality and fundamentals here. And it's a harsh reality check, because right now, the existing growth engine for TMC is essentially non-existent.
Well, they are a pre-revenue deep-sea mining venture. They're still in the R&D and regulatory phase of attempting to pioneer this extraction.
Pre-revenue is almost an understatement. I mean, looking at the financials from this report, in the first half of 2024, they brought in a mere $814,000. Fast forward to the first half of 2026, they are reporting a net loss of over $80 million.
And the burn rate is just accelerating. I mean, of that $80 million, roughly $60 million happened in the second quarter of 2026 alone.
It's brutal. And the balance sheet itself is technically insolvent on a book basis. They're carrying a negative stockholders' equity of over $27 million.
Yeah, with total liabilities sitting around $208 million, which completely exceeds their total assets of $180 million.
Exactly. So if we're talking about durable growth and cash flow, the fuel tank is dangerously close to empty. Their actual cash position dwindled to about $98 million by mid-2026. They rolled through roughly $20 million in just 6 months.
Even factoring in credit, their total liquidity is what, around $143 million?
Right, which forces me to ask a very cautious question. If they are balance sheet insolvent and burning tens of millions, how long can that $143 million actually last if regulatory delays happen? This finite runway is a massive dilution risk for investors.
It is the existential threat, absolutely. If they run out of cash before commercial revenue starts, which, let's be real, is at least 18 to 24 months away, they have to raise capital. And doing so at depressed stock prices would severely dilute existing shareholders.
So the fundamentals are terrifying. But, and I know you're very thesis-driven and growth-focused, you see an emerging engine here that justifies some optimism, right?
I do, because you have to look at the long-term growth drivers and the macro tailwinds. TMC's core mission is extracting battery metals for the energy transition and AI infrastructure supply chains.
Both of which are completely insatiable right now.
Exactly. We are seeing record copper inflows, massive AI data center demand, and major terrestrial supply concerns in places like Chile. Plus, China currently dominates the terrestrial processing of these minerals.
Right, which makes this a national security issue for the U.S.
Exactly. TMC isn't just a mining play. It's a critical minerals security play. And that brings us to their catalyst roadmap, starting with a massive near-term catalyst. On August 17th, NOAA, the National Oceanic and Atmospheric Administration, published a notice of intent.
A notice of intent to prepare an environmental impact statement for TMC's U.S. exploration license.
Yes, and I know it sounds like dry bureaucracy, but this is a formal procedural step toward domestic U.S. supply chain integration. The U.S. government is actively initiating the environmental review process.
It's like a biotech startup finally getting a meeting with the FDA, right? The product, these polymetallic nodules, is undeniably valuable, but the entire company's survival hinges on that government agency giving the green light.
Exactly. That's the near-term hurdle. The official NOAA USAA certification decision is expected this October. It's been delayed, but it's the big one. If they get that, a permanent grant is possible post Q1 2027.
But getting a permit doesn't magically teleport rocks from 3 miles underwater.
No, it doesn't, which is why the medium-term catalyst is arguably more important for the operational moat. Slated for the fourth quarter of 2026, TMC's engineering partner, Allseas, is scheduled to begin the physical fabrication of the commercial extraction system.
And Allseas is a heavyweight in offshore engineering. Moving from theoretical blueprints to actually welding physical steel in Q4, that's the tangible proof point investors need.
Yeah, and the technology is wild. They aren't building an underwater bulldozer. It's more like a giant deep-sea vacuum that uses targeted water jets to create negative pressure. It lifts the nodules while trying to leave the sediment behind.
Which is crucial, right? Because kicking up a massive sediment plume is the main environmental concern that NOAA is looking at.
Precisely. Demonstrating that the Allseas harvester can efficiently collect these nodules without smothering the surrounding ecosystem is just as vital as the permit itself. They're targeting Q4 2027 for the long-term catalyst, which is actually commissioning the system.
So we have the existing engine, which is burning cash, and the emerging engine, which is this NOAA and Allseas pathway. But what about optionality? Is there a wild card that could change the capital structure here?
There is, and it's massive. It's the potential for non-dilutive U.S. government funding. TMC is partnering with Mariana Minerals and Eco Minerals to potentially build a processing facility in Brownsville, Texas.
Ah, so anchoring it domestically.
Right. If the Department of Defense or the Department of Energy steps in with a massive grant to fund that supply chain for national security reasons, it completely changes their financial runway without diluting shareholders.
And that leads perfectly into our technical and sentiment check. Because there is a piece of data in this report that is just screaming optionality. Looking at FinHub insider data, there was a single massive open market purchase by an insider. 7,305,567 shares.
That is a staggering vote of confidence.
Right. Compared to just over 20,000 shares sold, that is a huge ratio. When someone inside drops that kind of money, you have to ask, do they know that this U.S. funding or the October NOAA approval is basically a lock?
It's tempting to think that, and it certainly provides a floor for market sentiment. But from a thesis-driven perspective, we have to remember that insider buying changes zero fundamentals. It doesn't put fresh cash on TMC's balance sheet, and it doesn't guarantee that tech works underwater.
Very true. And the broader market sentiment is still deeply skeptical. Even with that 20% pop to $4.79, the stock is down almost 35% over 26 weeks. It's still trading well below its 200-day simple moving average of $5.61.
Yeah, the market is severely discounting them because of what could go wrong. And we have to cover those threats.
Let's do it. What's the biggest threat to this wealth-building thesis?
There are a few, but the most glaring geopolitical one is the International Seabed Authority, or the ISA.
Right, the UN body.
Yeah, their mining code is completely stalled. It basically blocks access to international waters because 168 member states can't agree on environmental regulations, which is why TMC pivoted so hard to the U.S. pathway.
But the single biggest thesis breaker, the one that makes or breaks the company, is a NOAA denial. If they can't get regulatory approval in October, they can't mine. That remaining $140 million in liquidity just burns to zero.
Exactly. The business model just evaporates.
So factoring in that massive risk, let's look at the wealth-building verdict. The report lays out 2 scenarios. Let's start with the base case. The analysts gave it a 4 out of 10, basically a neutral rating.
Right. The base case acknowledges that TMC is a highly speculative, high-risk venture. The ISA code is stalled, production is years away, and the stock is still 58% below its 52-week high. They are inevitably going to need a capital injection.
Yeah, the base case asks the question, will this ever actually work? But let's pivot to the fun part. Walk me through the 3 to 5 year blue sky scenario. What does this business become if management execution goes perfectly?
Well, keep in mind, this is an optimistic outlook, definitely not a prediction. But in the blue sky scenario, NOAA grants the license this October. The U.S. government steps in with non-dilutive grant funding for the Texas facility, recognizing the urgent need to decouple from China.
Okay, so the runway is secured without dilution.
Exactly.
Yeah.
Then the ULSA system successfully fabricates in Q4 2026 and commissions flawlessly in 2027, proving they can hit scale with minimal environmental impact. In 3 to 5 years, they transition from a cash-burning R&D firm to a monopoly-like extractor of the world's most critical minerals.
And that completely changes the math for the market. The question shifts from will this work to how fast does this scale and how much cash does it print?
The risk premium plummets, and institutional capital would flood in.
It's an incredible potential compounding of shareholder value, but obviously fraught with risk. So, to summarize our verdict today, the strongest long-term driver is the massive U.S. macro push for domestic secure battery metals.
And the biggest threat is a NOAA regulatory denial or running out of cash before production.
Right. Our base case is a highly cautious neutral due to that severe cash burn and insolvency risk. But the blue sky case presents a generational wealth-building opportunity if they can navigate the regulatory and operational minefield over the next 3 years. Overall, it is a binary high-risk, high-reward play that requires extreme valuation discipline.
It really is a race between a diminishing pile of cash and the slow grinding gears of government regulation.
Before we wrap up, just a quick reminder, if you want to dig into data like this yourself, consider subscribing, liking, and commenting. And check out the link in the description for a 14-day trial to StockOracle. It's an affiliate link, so it supports the show. But remember, AI insights and value estimates may be wrong, so always verify them for yourself.
We want to leave you with one final provocative thought to mull over, something that isn't on any regulatory timeline.
Right. We've talked all about the race against the regulator and the balance sheet. But what if there's a third competitor?
Technology itself, the threat of obsolescence.
Exactly. Right now, the world desperately needs cobalt, nickel, and copper for current EV and AI battery chemistries. But battery technology is evolving at breakneck speed, right? We are seeing massive breakthroughs in sodium-ion batteries, which use cheap, abundant salt instead of these rare, deep-sea metals. We're seeing progress in solid-state chemistries.
It's a terrifying question for a long-term investor.
What if TMC spends the next 5 years surviving the regulators, enduring the cash burn, and finally bringing these metals to the surface in 2030?
Just to find out, the global market has moved on to a completely different chemistry.
Exactly. What if they win the regulatory war, but the treasure they bring up is no longer the treasure the world needs? It is a fundamental risk that no environmental impact statement can account for. The market waits for no one.
Definitely keep your eyes on that October NOAA decision. It's going to tell us exactly how much oxygen is left in the tank.
Thanks for taking the deep dive with us today. See you next time on Smart Wealth.